The government wants you to pay your fair share of taxes, but the world's wealthiest individuals often barely touch their principal wealth when tax season rolls around. Have you ever wondered why a billionaire might pay a lower effective tax rate than your neighbor or even you, despite earning millions or even billions more? It seems like a glitch in the system, a secret code that only a select few have the key to. Today, we are pulling back the curtain on how the ultra-rich actually navigate the complex world of tax codes to keep their fortunes growing while the rest of the world plays by a different set of rules. This isn't about doing anything illegal. It is about the high-level tax strategies that the wealthy use to protect their assets. In the next few minutes, we are going to break down the specific roadmap that the elite follow. We will dive into the world of offshore accounts and shell companies to see how they function as legal shelters. We will explore the sophisticated world of tax-advantaged investments that allow for massive growth without the immediate tax hit. You will learn how business deductions are used to turn personal lifestyles into corporate expenses, and how estate planning ensures that massive fortunes pass from generation to generation without the government taking a massive cut. By the end of this video, you will have a clear understanding of the legal frameworks used by the top 1% to achieve ultimate financial freedom. To understand this, we have to look at the context. This isn't necessarily about cheating. It is about understanding that the tax code is not just a list of bills to pay, it is a series of incentives. The government uses tax laws to encourage certain behaviors, like investing in housing or starting businesses. The rich simply have the resources to hire experts who know every single incentive available, while the average person sees their income taxed before it even hits their bank account. The wealthy operate in a world where they can often choose when and how they are taxed. It is a fundamental difference in how money is viewed and handled. While a teacher or a nurse might see 30% of their paycheck vanish, a tech mogul might see less than 10% of their wealth growth taxed. It is about playing the game with the full rulebook in hand. Let's start with the first major secret: legal loopholes and the reality of offshore accounts. When people hear the word offshore, they often think of dark rooms and illegal activities. In reality, offshore accounting is a standard and legal tax strategy. The goal is simple: move money to jurisdictions where the tax rate is much lower or even zero. By setting up shell companies or trusts in places like the Cayman Islands or Luxembourg, wealthy individuals can shield their global earnings from high domestic tax rates. These shell companies often own the intellectual property or the branding of a larger business. The domestic company then pays a massive licensing fee to the offshore shell company. This moves the profit from a high-tax country to a low-tax country legally. It is a sophisticated way of reshuffling the deck so that the house never actually wins. But that is just the tip of the iceberg. Wait until you hear how the rich use their own debt to avoid taxes completely. This leads us to the second secret: tax-advantaged investments. This is where the strategy known as buy, borrow, die comes into play. The ultra-wealthy don't like to sell their assets because selling triggers a capital gains tax. Instead, they buy assets like stocks or real estate that increase in value over time. Then instead of selling those assets for cash, they take out a loan against them because a loan is not considered income, it is not taxable. They live off the borrowed money, which often has a very low interest rate compared to the tax rate they would have paid if they sold the asset. When they eventually pass away, their heirs receive the assets at a stepped-up basis, meaning the capital gains tax is essentially wiped out. It is a cycle of wealth building that keeps the principal intact while providing a tax-free lifestyle. They also heavily favor municipal bonds, which offer interest that is often completely exempt from federal and sometimes state taxes. They are essentially getting paid by the government to keep their money in a safe place. The third secret involves business deductions and structuring. Most people are employees who receive a W-2 where the tax is taken out automatically. The rich, however, almost always operate through business entities like LLCs or S-Corp. This allows them to deduct almost every expense related to their lifestyle that can be tangentially linked to their business. Travel for a board meeting in Hawaii, that's a deduction. A high-end meal to discuss strategy, that's a deduction. Even their home office, their car, and their continuing education can be written off against their income. By the time they finish subtracting these expenses, their taxable income is significantly lower than their actual cash flow. They aren't breaking the rules. They are using the specific provisions designed for business owners to stimulate the economy. This shift from personal spending to business expenses is one of the most powerful tools for wealth preservation in existence. Secret number 4 is where things get generational: estate planning and trusts. The goal for the ultra wealthy is to make sure their money stays in the family for centuries. To do this, they use dynasty trusts and grantor retained annuity trusts. These structures allow them to move massive amounts of money to their children or grandchildren while minimizing or entirely avoiding the estate tax, which can be as high as 40%. By placing assets into an irrevocable trust, the individual technically no longer owns them, so the government cannot tax them as part of their estate upon death. This ensures that the wealth continues to compound for generations, creating a cycle of prosperity that is almost impossible to break. It is a long-term chess game where the pieces are moved decades before the final whistle blows. Now, you might think these strategies are only for billionaires, but secret number 5 is about tax credits and loopholes that you can access too. Many of the same principles apply to the average person if they know where to look. For instance, tax credits for solar panels or energy-efficient home improvements are direct subtractions from what you owe the IRS. There are also education credits and health savings accounts that allow you to put money away tax-free for future expenses. Real estate is another area where regular people can use the same tricks as the rich. Through depreciation, you can claim a loss on a rental property on paper, even if the property is actually increasing in value and making you money. This phantom loss can offset your other income, lowering your total tax bill. It is about applying the same logic of the elite on a scale that fits your current financial situation. Many myths concerning this topic must be debunked. Myth #1: rich people pay no taxes. Usually false. They pay millions in taxes, but the government receives a surprisingly little percentage of their wealth or income. Second, the fallacy that these tactics are only for 9-figure earners. S-corp status, real estate depreciation, and strategic borrowing are available to the middle and higher middle class, but some offshore entities are expensive to maintain. Education and implementation differ. Understanding these tax methods is the first step to wealth creation. What are today's practical lessons? Change how you view your income first. If you can turn even a small amount of your earnings into a business, you can deduct more. Second, consider tax-advantaged accounts like Roth IRAs and HSAs for tax-free growth. Third, use professional expenditure tracking. You keep every company or investment expense dollar instead of paying the IRS. Knowledge is the ultimate financial leverage. You play better when you know the rules. Today, we examined offshore shell corporations' difficulties and energy tax credits' simplicity. The wealthy don't just labor for money, they put it to work for them to minimize government take. They secure their investments with legal structures and prioritize long-term growth. Which strategy surprised you most? Is it buy, borrow, die, or how shell firms move earnings abroad? Leave a comment below. We read every response and appreciate hearing your financial freedom perspective. And if you like this breakdown and want to learn more about advanced wealth building tactics and financial elite secrets, subscribe and turn on alerts. We strive to reveal the reality about modern money. Our other films on investment tricks and super rich psychology can help you reach financial independence. A link in the description leads to a free guide on missed tax tactics you can use this year. We appreciate your time, and remember that financial education is the best investment you can make. See you next time.